Managing debtors. It is wonderful to have lots of customers, and one of the ways to achieve this is to allow credit, as credit attracts customers. However, there are a number of disadvantages of offering too much credit. The most obvious is obviously the risk that they don't pay you. However, other than this extreme, even late payments can also affect the business through poorer cash flow. It is therefore very important to manage debtors very carefully. You will do this through having a solid credit policy. This would include aspects such as credit approval, which might include the requirement of credit references from the customer, which can then be checked to find out about their credit history. Credit limits should be set. These should be allowed to new customers. In other words, it determines how much they are able to spend. The business should also make sure that they update the credit limits of older customers according to their credit record within the business. Where you have customers who pay well, you're welcome to add a larger credit limit. This will also improve customer loyalty from these customers and build good customer relationships. However, where you have customers who are taking too long to pay, their credit limits may need to be reduced. Specific credit terms need to be offered. In other words, how long the debtors have to pay. Again, just like with the credit limit, this will usually be determined on how good or bad your customers are. Although, again, like the credit limit, you may have a basic starting point where your terms are generally the same for all your customers. It is also possible to offer discounts to customers for early settlement of their account in order to encourage them to pay early. The opposite of this is to charge interest on overdue accounts. However, simply charging the interest on its own is not enough. You would need to follow up outstanding accounts, either by sending out letters as soon as the account becomes overdue, or possibly by making phone calls, etc., to find out why the amounts have not been paid. Good credit control is vitally important in order to try and avoid bad debts. Bad debts affect the cash flow of a business very negatively in two ways. The most obvious is that the business does not receive the cash due to them from the sale. Less obvious is the fact that the VAT on the sale is paid by the business, usually within 2 months of the sale, but this cash can only be claimed back from SARS from bad debts 6 months after the sale. The longer the debtor takes to pay an account, the less likely they are to pay. For this reason, it is vital that early payment is encouraged and the late payments need to be followed up as soon as possible. So how do you do this? Firstly, you can charge interest on overdue accounts, as mentioned previously. However, if the person receiving the account is ignoring these accounts, this is not going to help you at all. This is where direct contact is vital. You can either make a phone call to find out the reason for the problem or send a letter. Obviously, the worse the problem is, the harsher the letter or the results of whatever it is that you are trying to take action with. This is an example of a friendly collection letter that might be sent to a customer who is only a few days or a week overdue. You can see that it is politely worded and gives the person the option of saying there was a problem with the invoice, which might explain why non-payment has happened. This, however, is an example of a harsh collection letter. Here you can see that the wording is much more formal and the details very specific. There is also an implied threat where the customer is warned that unless payment is received in full, then they will have no option other than to set the lawyers on them. Obviously, this kind of letter should only be sent as a last resort, and if you do have some lawyers who will be able to follow up for you. Consider this cartoon. Your credit rating is a bit low, but we can still offer you a loan. Do you have a problem with being fitted for an electronic ankle bracelet? Although this is a little extreme, this cartoon does illustrate the importance of being able to track your customers who owe you money and making sure that you are able to find them when you need to so that you don't lose out on the cash. An age analysis of debtors. An age analysis of debtors is very useful to help you to manage your debtors as best possible. It's all very well knowing what to do when the accounts become overdue, but you also need to be able to track the age of the debts. An age analysis will help you to determine how long each account is overdue, so that you know what measures to implement for each debtor each month. Computerized accounting packages will usually generate an age analysis automatically for you. This age analysis is then usually shown on the bottom of statements, which are printed and sent out to debtors or emailed. However, it is important for you to be able to understand how this is generated so that you are better able to understand and use an age analysis of debtors. The first thing you need to be able to do is understand how to apply credits. In other words, when the person pays you, what invoice do you allocate the payment to? Well, when people pay you an amount, if it's not the full amount due, you need to assume that they are settling the oldest amount first. This is quite logical if you think about it. For example, if somebody owes you money from a long time ago and they now decide to pay you, if you had to allocate it to the most recent invoice, which might have a discount applicable, that's not really fair. So, you will always apply payments to the oldest amount due. However, if they return goods, one would assume that a return should be made within a certain period of time, and the assumption is therefore made that any return from a customer is made against the most recent invoice, unless otherwise specified. So, how do we draw up an age analysis of debtors? The easiest is to try and create a logical table. The exact layout is not very important, as it's simply creating information that is useful to you. However, this generally seems to be the most common, where you would have columns for the different number of days overdue. For your own purposes, it helps to insert the month in which that invoice or payment must have related to, although a basic age analysis of debtors will only show more than 90 days, 60 to 90 days, etc. The January, February, March, April is what I would pencil in. You then record all the invoices in the month that the invoice was actually issued. In other words, the date of the invoice. So you can see here debtor 2 had an invoice that was dated in January. In other words, more than 90 days ago. So it will go in that column. You will then record all the payments against the oldest invoices. As you can see for debtor number 1, their payment is allocated to the amount on February because they also have an invoice in March that has not been settled. Lastly, you will then record all the returns against the newest invoices. You can see that debtor 2 is not a good debtor as they have not made any payments, only a return. You can see that this is a return as it has been offset against the recent invoice in March. Once you have applied all the payments and returns, you can then calculate all the totals in order to determine for each debtor what amounts are overdue when, as well as the total of all your debtors. Let's have a look at example 8.7. Information number 1. In Hofmeyer bought goods for 5,000 Rand on the 2nd of January. Notice that we have penciled in the months January, February, March, April, based on where we are now. We are currently at the end of April. So if the invoice was in January, it's more than 90 days ago. Number 2. J. Kariuki bought goods for 2,300 on the 15th of January. In the same way, this is an invoice that was issued more than 90 days ago and is so shown in the first column. Number 3. N. Hofmeyer paid 3,800 Rand on account on the 22nd of February. Where a payment has been made, the date of the payment is not important. However, it is important that it is allocated against the oldest amount due, in this case, the 5,000 Rand in January. Number 4. N. Hofmeyer bought goods costing 4,200 on the 24th of February. Since this is an invoice, we are worried about the date, and we will therefore insert it in the column relating to February, in other words, 60 to 90 days. Number 5. J. Kariuki bought goods for 1,700 Rand on the 7th of March. As an invoice, you will also insert this in the column relating to March, in other words, 30 to 60 days ago. Number 6. J. Kariuki returned goods costing 500 Rand on the 1st of April. Since these goods were returned on the 1st of April, it needs to be offset against the most recent invoice before that. In other words, the entry number 5, the invoice on the 7th of March. That is why the minus 500 is also shown in the March column. 7. N. Hofmeyer paid 300 Rand on account on the 15th of April. Here is a payment that is being made. Again, this is being offset against the oldest amount due. Although N. Hofmeyer has an amount owing from February, there is still money owing from January, and so that is where the 300 Rand needs to be allocated. 8. J. Kariuki bought goods costing 1,400 Rand on the 31st of April. This is an invoice and so will be inserted as current because it is in the current or most recent month. If you look at these two debtors, although N. Hofmeyer has more money owing from a longer time ago, at least N. Hofmeyer is actually making payments. J. Kariuki is one who I would find a little more worrying, as she also has amounts due for more than 90 days. However, credit is still being extended to her, even though no payments have been made. The only credit on her account is a return of goods. This will not be very profitable for this business. Now you can work through exercise 8.8.